Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day today. It is Thursday. You know that means that it is time for high probability short-term profits. We are on an 18 win streak right now. We're going to go over a quick market review with Mike Wade. We're going to talk about that 18 win streak right now and how many we've gotten. I think is it 37 out of 39 now. That's pretty solid. We're going to talk about last show's trade, which was Netgear and C3 AI. Then we're going to go over a current trade that we have for you here today. And then we're going to go ahead and talk about your audience stocks, whatever you have ready for us. Go ahead and put that in the chat so that we do have that ready. And a little bit later, whenever Mike's ready for it. So right after this, we will get to Mike. Mr. Mike Wade. How are you doing today, sir?
I'm good, man. Top of the morning to you.
Top of the morning to you. Any monkeys? Any monkeys?
No monkeys, man.
No
they
monkeys.
haven't come back
Jeez,
in
Louise,
2 weeks
I
now.
can't even.
I might have to put out some monkey food out there for bananas, and maybe they'll come back.
I think that would help. Yeah.
Yeah. I woke up this morning. I live in a sort of in a valley a bit, and I'm just surrounded by nature, and it's just beautiful. Y'all, you got to come down here and visit me sometime, man.
Absolutely. Mm-hmm. Well, we had a pretty crazy day yesterday with everything going on. I mean, there's a lot going on.
It was weird. I'm going to start with a chart, and then there's a graphic that maybe you can pop up in a minute. But we're all watching at 2:00 when the rate cut came out, and most were expecting a 1/4 point rate cut. We got a 50 point or 0.5% rate cut. And look what happened during the day. So this line here at a round number 565 resistance. Don't get me evangelical on you, but man, these lines are so important and so valuable. And then right after the rate cut, bigger than expected, the market set new highs. And then Powell came out and he said, yeah, the job market is stable and inflation is dropping and the economy is growing and retail sales are rising. We have a really good economy and we're probably going to cut rates by another 1/2 point in December. And it was like deer in the headlights. It was like, what? And the markets froze and fell back down below this level here. And I was like, what? What do you want? And so we had a delayed reaction. And what's happening this morning? Oops, sorry about that, Ryan. I was going to come on camera and talk about, what am I doing to your screen there?
That's no worries.
Infinity. And now we have a delayed reaction. It was like somebody comes in to a party and then they offer some big surprise, like a keg or something. And then everybody's like, what? And then boom, party starts again. So that's what's up. And if you take a look at where we are pre-market here, I'm using the Hub software. You can go to hub.com and check it out if you like. But look, pre-market 570. All right, that, ladies and gentlemen, is an all-time high. We're going to open the futures. I can go to CNBC and get the futures here. But you can see here the futures across the Dow, 1.1% higher. The S&P 500, 1.58% gap up this morning. NASDAQ futures up 2.19%. So from here, for me, given the future climate of rate cuts that are coming, maybe at the end of the year, another 1/2 point, next year, more, inflation is where it needs to be. I got to say bullish run from here through the end of the year, I'd say at least, especially given this meteoric run. Now, having a strong directional prognosis is actually a benefit, even if you're sniping. But having a strong directional prognosis backed up by economic conditions, rate cuts, et cetera, this market has every reason to continue rising. It's the same on the diamonds, the Dow Jones Industrial Average. These two indices are at all-time highs as I speak. So the Dow is set to open up right up here around 420 on the diamonds. So this is all time. Yeah, heck, we had an all time high, intraday high on the diamonds yesterday, and this sucker is poised for further upside. The Qs, which is the Nasdaq 100, not as bullish. All time high territories up here, right around, what is that? About 503. We are going to open up higher on the Nasdaq as well. And then the Russell 2000, watch the Russell 2000, because Russell 2000 stocks, these are the smallest 2000 companies in the United States, and they benefit more than the bigger companies on rate cuts because, presumably the smaller companies are borrowing money more. And with the rates dropping, their cost of money drops as well. And that has a direct impact and a meaningful impact on their earnings. So keep an eye on the Russell 2000 as well. All right, so it's party time. Markets have every reason to keep on going up. Now, let's take a look at our portfolio. Last week, we placed a trade on Netgear, and we caught this at the open. And what we did here, Netgear came out and blew out earnings, raised future guidance, all that good stuff. And the stock gapped up. We sold a 17 put, bought a 16 put with our line in the sand at 17. Let me show you the Netgear chart here. And I'm going to go using these watch lists here. Let me show you Netgear. Here's what it did. And we decided that, well, there's very little chance that Netgear is going to drop all the way down here to 17. So we got in on this day here. The stock gapped up on great news. We sold a 17 put spread. The stock ran up, and we were out of this trade in the same day. In the same day, we ended up nabbing about 12% once we bought the spread back by the end of the day for 1 cent. We sold it for 12 cents. We bought it for 1 cent. We netted 11 cents on 88, and that's right around 12%. In a day. This is why we start this show 15 minutes before the market. Because in the morning, if you can catch the news, you can catch the gaps, you can catch what's called implied volatility, premium, cost, expense. It's like a feeding frenzy in the morning. All this IV, you can drop a hook in the water and oftentimes nab a really nice credit and be out of the trade, sometimes within minutes and sometimes by the end of the day. And that's exactly what happened on Netgear. We'll take it. That's what brought our average up to 18 straight wins. So we're running really well. And by the way, I'll show you this other trade here, and then we'll look at our performance report here in just a sec. Now look, here's another one on C3AI, and the stock tanked on bad earnings. And then sometimes this happens. Sometimes stocks recover, and it filled the gap. It opened there the day before earnings, or closed there the day before earnings, and then opened up down here the next day. So when the stock was down there, we were saying, well, not much of a chance that the stock is going to come back up to this 2350 level, which was, let me go to the right stock here. Let me pull up AI. I don't have this one loaded here. Let me just pull it up, and we can see the complexion of this trade. And, when we got in, the stock was way lower than it closed the day that we got in, and the stock came up. And look here, we set our line in the sand at 2350 because that's resistance. You can see the resistance there prior to the earnings gap down, and then the stock is attempting to get back up above 2350. Indeed, yesterday it was above 2350. The day before it was above 2350. And today it looks like it's going to open up again above 2350. So this may very well, Ryan, this might end our win streak, but we have to wait and see. One of the things about trading is you can get invested in, oh my God, I'm going to have a loser. You can play that game if you want. It's not a fun game to play. Or you can detach and react with rules. Our rules are clear. If the stock closes above our line in the sand, where we sold our short call, the stock closes above 2350 today. Right before the market closes, the stock's above 2350. Just buy it back. Just close it down and then keep rolling. Take your losses. Be good at losing. I'd rather lose, say if we get out here around 20, this break even, which is 23.62. Let's just say that's where the stock closes. Then we're going to lose on this trade probably $120. But that's $120 loss is a lot better than the max loss up here, which is 440. So risk management is the name of this game. It's fun when the orders just come off and you get profits and profits and profits, but really the game we play is risk management. Manage the risk and let the winners take care of themselves. Manage the risk. That's the job. Flip the battery in backwards. Most traders are after the profits. What if I close this down and the stock comes back down and I could have made money on this trade? Forget that. Ignore that. Just follow the rules. Let the rules run the system. If you do it that way, your psychology improves. You'll be relaxed, more peaceful, and you'll have consistency. Okay? Manage the risk. Let the winners take care of themselves. It'll save, and most have the battery in the other way around, right? Let's get profits and then we'll think about risk later. No. Manage risk. Let the winners take care of themselves. I'm getting evangelical, I know. But when I first started trading, 1998, I wasn't trading that way. And I lost a lot of money in 2000. And so my evangelical nature around risk management is given by getting hammered because I wasn't doing it when I first started trading. It was about 24 years ago is when I had my big, terrible crash experience. And that's gotten me to where I am today. So that's words of wisdom from a guy that's been trading for a quarter century. And I'll stop now. Hey, Ryan.
Yes, sir.
Let's talk about interest rates a little bit and the impact of interest rates on commodities. Okay, so we have a little chart here. And this comes from one of the articles I wrote a while ago. And here's the deal. We know that interest rates are going to be dropping. This is the first of many. As the Fed gets the rates down to 2%, 3%, something like that, 2% is the target, then we have a long way to go. So we know that further interest rate cuts are coming, subject to news, subject to jobs market, subject to how inflation is behaving, all that. The data could change that. But we know that interest rates just came down, and they're probably going to come down again. And so what's one of the intermarket analysis relationships that we use over here at Michael Wade Trade Coaching, I have a community of people that I teach this stuff to, and we trade with it. When interest rates drop, the impact of that is that commodity prices generally rise. Hey, guess what? Gold is a commodity. We'll talk about gold, oil, anything, silver, anything that is hard and you can touch. Those prices tend to rise in a dropping interest rate market and vice versa. And so when the Fed started lifting rates a couple of years ago, commodity prices started to drop. And now we've just begun our rate cut cycle. And so we have every reason to suspect that commodity prices like gold are going to keep on rising. All right, so this is an intermarket piece of news. The news is, and we're off. The news is the Fed just cut rates, and they're going to cut them again probably in December, maybe a half a point. And when we go over here to the hub chart, I want to show you an ETF that tracks the gold commodity. Let me reset my template here. All right, so this is where gold is now. Okay, so I've got some lines in the sand drawn on this chart. Let me zoom this chart in a little bit so you can see. So I've drawn a few lines on this chart, and these lines are nothing more. Every line you see on this chart is support and resistance. Okay, so just I want to make sure you can see all this, so I'm resizing the chart for you. Okay, so first off, notice the purple lines are drawn at round numbers, increments of 5, 225. Why did Mikey draw a line at 225? Well, because it's resistance, it's support, it's support, it's resistance, it's support, it's resistance. Notice the turning points in these charts dead on 225. And then what about 230? Support, 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 support. And then what about 235? Support, support. And then what about this line connecting the lows of these bars? This is called a trend line. Look at that. Support, 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 support. So with interest rates just dropped and future interest rate cuts, the directional prognosis on gold is up. And I would have to say most likely not down. And so this is a really good example of where we could sell a credit spread somewhere below these support levels. All right, I could sell at 235. That to me is too close. But look, if I could get some credit down here, and I don't know, I have to look. Here's where gold is now. By the way, that where my fist is there, that was all-time highs on gold during the craziness of the afternoon yesterday with the rate announcement. And then it dropped, and now it's back up. All right, it doesn't want to drop below 235. Why would it? Why would it? It could. It definitely could. But interest rates are going to be dropping. At the worst, I would not expect gold to drop from here. And if it did drop to 230, what would it have to do? Well, it'd have to drop below 235, support. It'd have to drop below this very strong trend line. Also support, that's 2. It'd have to drop below 232.50. You see that support level? Was resistance, now support. And then it would potentially get to 230. So we have technical guardrails, lines in the sand, I call them, that should keep gold from dropping. If it does drop, it's going to have to bust through 1, 2, 3, 4 levels before we lose money on gold. All right? So this is sniping. Now, what I'm going to do next is go right into a simulated environment, and we're going to go take a look. I want to sell right at 230. Now, I'm going to give you another little trick here. Let me pull up my crazy calendar. Don't get scared. I get scared every time I look at it. But look, these are this is the calendar, and I want to point something out. Okay, so gold has expirations 3 days a week. This is Friday. The 20th is Friday. And then we get Monday, Tuesday, Wednesday, Monday, Wednesday, Friday, Monday, Wednesday, Friday. And then we get the next, and that's where it stops. And then that granularity increases as you go along. So sometimes you can get a trade that expires on a Monday. Now, why would that be a benefit? Let me go into October. Why would that be a benefit? Let's take a look at a calendar here. All right, so I could sell a credit spread on gold, maybe expiring on October the 11th. Okay, so that would expire on October 11th. But what if I put a trade on that expired on the Monday? What's the benefit of that? Well, credit spreads make money with the passage of time, the way we do them anyway. So if we put a trade on Monday, we'd have Saturday and Sunday of extra time decay. We'll get more premium. We can wait over the weekend. And while we're going through the weekend, gold's not going anywhere. So the gold will stay flat. We'll get what's called theta or time decay benefit, and then we're out on the following Monday. So that's the idea. And knowing that, I'm going to be looking at expirations here. Okay, so we've got, let's see, October the 4th is a Friday. September 27th, September 30th. Let's see, September 30th should be a Monday. It is. So if I could get a trade on September 30, then I would have 2 extra days of time decay. So let's see if there's anything for September 30. I know this is more of an advanced idea, but let's go take a look and see what's there. And if I sold the 230, 229 option, this would be an 11-day trade. I only see 6 cents. Okay, so it's not going to work. I don't have enough value there. That credit should be minimum 10% of the spread width. That's $1 between those two strikes. That spread's max value is $1. I want to sell it for 10 cents. And there's only 6 cents there. So the only thing I can do then is sell some more time and go to the next expiration. So that thing I was trying to do isn't going to work out. The October 2 options are 13 days. Let's try October 4. So I'm just adding more time to see if I can get my credit. October, let me just do it from here. I'll do it from here. October 4, there's 11 cents. All right, there we go. That's what we're going to do. This October 4 option has 15 days. That's the sweet spot. I can see 10 cents there. And don't rush on this. This is not, it's not dire that you get in right now. You can get in later in the day, but this is the trade that I'm going to go after. It shows 11-cent credit. Let's confirm and send. And I'll read the order again for you. So what we're doing here is we're selling 5 gold, GLD, October 4, 230 puts, and buying the underlying puts, the 229 puts, for an 11-cent credit. I'm seeing it's down to 10. So what I'm going to do here is cancel, replace this, and just get my minimum. Don't get greedy. Just grab it. And that should fill here momentarily. But at this point, I'm not going to go for anything less. It just got filled. Let me show you the trade that we just did. If you like this trade, you can play along with us. And let me set up. I don't have this up here. Let me pull this up quickly. Here is the order we just did. GLD is the stock symbol. October 4 is the expiration date. 230 is the short put. This is our line in the sand now. And 229 is the long put. This is our protection in case the stock drops. You've got your net credit of 10 cents. That's filled. And now, once you're in, you want to make sure that you manage your risk first. And so remember, the risk management on this gold trade, let me go back to the hub chart just to really emphasize what we've done. So I'm going to change this to a different color line so you can really distinguish. Let's try, how about blue? And let's make this a little bit higher in size. All right. So here's our line in the sand. Gold is hanging up here. We just got 10 cents on this 230, 229 put spread that makes money anywhere above 230, up, sideways, down a lot. We're still going to make money. And then, but we might. It's possible for gold to drop from here. So if it does drop below this level, this level, this level, and then this level, 230, then just close it. Just close it and don't think twice. So that's the loss exit. It is the most important exit. Now, the way the system's built, you don't even have to worry about collecting your profits. We can set up what's called a GTC, good till cancel order, to buy the spread back to close for 10% of the original credit. Okay, the original credit is 10 cents. So we'll put an order in to buy this spread back for a penny. Let me show you how to do that, at least in Thinkorswim. So I'm now going to do immediately after you're filled, do this. Create the opposite order, put the battery in backwards, buy back the 230 put that you sold, sell the 229 put that you bought, and do that for a penny. That's this. When this executes, you'll nab 90% of the total credit available and keep your hold times short. Ours is 5 days. And then GTC, confirm and send. And now all you got to do is keep an eye on the stock. And as long as the stock is hanging out above 230, there's nothing for you to do. The whole thing's on autopilot. So, Ryan, that's a good trade there. News-based sniper format, 14, 15-day trade. good chance to make 10%, probably sooner than later. We'd probably be out of this trade next week, most likely, as long as gold hangs in or even sets higher heights.
I dig it.
All right, Ryan, that's what we got, brother. Any student stocks?
Let's see. We have WSM or DE. So start with
Okay.
WSM.
That sounds like Williams Sonoma. Let's pull up WSM. Williams Sonoma, expensive house stuff. Let me get my template reset here. Okay. Interesting. All right. What I like about it, I'm going to check the news here in a minute. I like that the stock has now, at least right now, it's finding support at 150. All right. So it's up. Well, why is it up? I don't see a lot of probability in the chart, but let's check the news. You can go to any place to get the news. I'm going to go to finance.yahoo.com, Yahoo Finance, and see what's up. Okay, they're raising their dividend, or they're paying a dividend. So they have a dividend announcement that's pretty healthy. A 57-cent dividend per share is quite healthy. Quarterly cash dividend upgraded to buy from Jefferies. That's good news, but not the kind of news that I think has a lot of staying power. Yeah, it'll draw some people into the stock because they're paying a healthy dividend. I look at what institutions are doing with it, and they're like, oh, okay, it's up a little bit. The longevity of this type of news is not as strong or prolonged as, hey, we missed on our earnings, and we're going to have a worse earnings announcement in the next one, lowering their future guidance, or vice versa. We blew out our earnings, and we're going to do better next time. Those forward-looking pieces of news have more staying power. So I think this chart's interesting. I like that it's paying a higher dividend, but I'm just not seeing a lot of reaction to it. So I pass on this one. And the other one was John Deere. I think you said DE.
Yep, DE.
Tractors. Let's see. What's the stock doing? Woo, baby. It is taking off. That is a really healthy run up. Again, sniping is news backed. What's the news? Give me some good news. I want to see some really good news. Let's see. Don't see any. I'm looking for, an earnings announcement, raising future guidance. I like drug stocks as well, where they get an FDA approval or a trial is favorable or vice versa. But I'm just not seeing enough of a news punch to grab it. That does not mean that this stock isn't going to keep on keeping on at all, but it's just not a sniper. And the other thing I look at here would be longer term support and resistance. And I see 410. And you all see how 410 is an important level. Resistance, support, resistance. So it's likely to find some level of support, of resistance there. And then after that, right up here at the top of that bar there, maybe 415. Let's make it a round number. Look at 415. Look at that. 415 right there. That's 415. Resistance, multi-year resistance. It could rise to 415. But again, Ryan, we have and maybe the guidebook is good to talk about the guidebook right now, because credit spreads can be used in any number of different ways. They have right out of the box a 2 out of 3 chance of making money if you sell right where the stock is. If you put your line in the sand right in this where the stock is, you have a high probability of making money, 66% roughly chance of making money. But what we do is we want more than that. I want a 90% probability of making money. Just get on base. I'm not swinging for the fences. I'm not even trying to get a hit. I just want to get on base. And so this guidebook that we've written is free. There's a link right below the video, or I believe it's even on this live here. Grab that guidebook. It takes you through a 5-step process. How do you decide your lines in the sand? What is a good piece of news or a bad piece of news? What the heck is a credit spread? How do I build them? What's the risk reward profile on them? And then how do I manage them? So this is what I do every Thursday morning at 9:15, and it's all in the guidebook. And guess what? It's free. Free. Grab it. You got to give us your email number, your email address, and your name, and we'll send it to you. And grab the guidebook and come join us every Thursday morning. We have 38. How many straight wins, Ryan? 18?
18, I think. Yeah.
18? What? We haven't lost in 18 straight trades. We've done 39, and 37 have been winners. We only had 2 losers. And that guidebook is exactly how we did it. So grab the guidebook, everybody. Ryan, always a pleasure, brother. You got big plans for the weekend?
No, nothing too crazy.
Yeah, me too. I'm going to hang out with the monkeys this weekend.
Nice.
Take my dog down to the river and watch out for crocs. They have crocodiles down here, man.
Jeez.
I got some stuff that'll hurt you. You got to be careful. And panthers and snakes and stuff like that. All right, everybody, that's a wrap for today. Have an awesome day, an awesome weekend, and we will see you next week. Same bad time, same bad channel. Bye, y'all.